Hello traders and welcome, and I just want to talk to you very briefly about scalping in this sort of volatility, and something I'll come to in much more detail on Traders Round Table. And here's the 15-minute chart on this Dow, and we're seeing incredible moves. I mean, even the 2-minute bar is something over anything between 80 and 150 pips at times. Is huge. I mean, I've never seen anything like it. So how can you trade this? My suggestion is that the more volatility you get, the bigger the time frame you need to trade this. Because even the open trading range is tradable, but you have to be very, very sharp and precise about how to trade the open trading range at this stage, which is how you should be trading it normally anyway. But you know, it's trickier, it's faster. So my suggestion to you is this. This is the 15-minute chart. This is how I ended up marking it up on Friday. And you can see we had the day's high was 24,200 and the day's low was 23,330. So nearly 1,000 pip range. Is that right? Yeah. So my suggestion to you is a 15-minute chart is going to be a much better way of trading this market. So trade smaller size, bigger stop and bigger time frame at the moment until this settles down. Because if you strip all this back, what you've got here is a buy signal, a very, very simple buy signal at the reversal time at 6:30, 6:45. And then, so if you mark that off, so you try and buy a pullback once that triggers, so you don't just dive in, otherwise you, in theory, you need a stop of something ridiculous like 120 plus pips. If you try and buy a pullback and say you get a 30 pip stop, you stand a good chance of staying in it. And if you stayed in it, then the pullback entry was about 420. If you stayed in it till if you look till the high again, you got 2420. A lot of pips, 600 pips, I think. So if you're a pound a point, for the sake of about an hour, you get 600 pounds at a pound a point. That's better than trying to go 2, 3, 5, 10 pounds a point, getting a stop a little bit too tight and getting a whacking great stop out, particularly if you suffer some slippage with the violent moves that we're getting here. Alright, so that's my suggestion to you. You just go up, move up the time frames and try and just trade a much simpler strategy than trying to pick what's going on here. So at the moment I'm going to mark that Friday close on this chart, and in fact I'm going to mark the Sunday open range, because that's what this is here. That's the Sunday range here, and right up until an hour after we were trading, we broke up to the high of the Sunday range, peaked above it, put in a sell signal at 4 o'clock, 4:15, and then the rest is history. And then on, I think it was Wednesday, sorry, we came back and tested it. So we've got a dead cat bounce. A dead cat bounce is where there's just so many people, so many traders, institutions short. As soon as it starts to get bought, which happened to be in the Asian period, you get a funnel pattern breakout, and we get a 1, 2, 3, 4, 5 wave to the upside, 5-wave correction. But when we eventually get back to the highs, late in the day on Wednesday, we start a topple into the close, and then on Thursday we hit a resistance area. Actually, in the morning, close to the open, and then we just topple over. Okay, so these 15-minute charts are much better ways of showing signals. I think I'll be looking at this in terms of what I'm talking about in the WhatsApp and Skype room alerts to try and give you the heads up with what these 15-minute charts are doing. Okay, I mean the pullbacks are just, you're getting 300, 400, 500 pip pullbacks to the upside. So there's a few green bars in there, and then a very big push to the upside, and then only then do you get the lift to the downside back to the overall trend. So take it easy. I'll look at the DAX in a minute, but let's just get this ranged up at the moment. And you'd notice I've taken the 200-day moving average off of this, just to try and clarify what's going in the charts, because I don't think a 200-day moving average is going to make a whole heap of difference at this stage. The bigger time frames, however, now at the moment I've got a 3-hour chart. Again, because of the volatility, I've dropped down from 4 hours to 3 hours, and I've got a 50-day and a 200-day moving average. So I've dropped that down from the 20-day moving average to the 50-day moving average. So it's slower to try and capture pullback moves. So here's the overriding trend line in the 3-hour Dow. So the next test of the trend line, which I suspect is going to fail, is going to be round about 24,700. Now if we close above that, obviously I would completely change the story, but at the moment this is bearish. Obviously bearish, I don't have to tell you that, and I think we're at least going to come and test that down support there. So if that fails, expect to find some lower levels. It's possible this is going to just pick up and run into next week. If you look at the daily chart, we have a hammer-like bar off of the 200-day moving average, but we've got 20, 50 and 100 all above us. So I don't think they're done with it to the short side, but I'm prepared to be proved wrong if we start closing above at least the 100-day moving average. I think we're going to want to come and test some of these lows. Now, if I drill down to, I think I've got it on a, well, there's a 3-hour pattern showing a resistance above and support underneath. We're not even hitting the 20-day, we're not even closing above the 20-day average at the moment. Was it my 4-hour chart? My 4-hour chart has got this, as you can work out this channel here that's coming up. Let me get the pen. This line here and this line here is channeling up on resistance levels. It was support here, now it's resistance. That's 26,000. This channel also comes up from, if I pull it right back, you'd see it's going back to August, I think it was. So we pushed above it, dropped underneath it, just peaked back above it, and then fell from it here. So this was the bullish channel. I think a test, what I'm trying to get at is, I think a test to the underside of that is going to get the next leg down. And I think the next leg down, let me show you where the fibs are. I've got the fibs on, let me get some more data on this. And put it apart so you can see what I'm doing. Should have done that before, sorry. Okay, so you can see the channel. Let me draw that a little bit more carefully. Okay, so you can see if I scroll back, you can see the highs from here in August last year, October last year. We had this frantic push to the upside into early part or late January, and when we broke down on that huge flash crash, it came back to test the underside of it. This is a trend line that's picked up from, again, some low levels in May, and summer last year, August last year, and that's picked up some support on the lows. So I think, again, look how we've got all moving averages in the 4-hour chart above us, all of them. So I think there's still a heck of a lot of weakness, and I think the bears are going to sink their teeth into that in a little bit more. Possibly we can come back into this and start testing some of these upper levels. But at that stage, I think we could at least come and test 23,000 again. However, close above 24.5 and I will potentially change my story. Alright, so I still think the highs are shortable, and I think it could be, where are we now, 10th of Feb on this Saturday as I'm doing this video. I think it could be well into, if I'm right, I think it'll be well into the 3rd or final week of February before we might come out of this. Now, the fundamentals of the economy are good. We have decent levels of, very high, healthy levels of employment, but there are other factors that are kicking in. The sovereign debt in the US is out of control. Their tax revenues are about to drop because of all the tax cuts, and we've got more interest rate rises coming up to support the dollar. So short term I'm bearish. Long term I think we'll definitely pull out of this, because there's no reason why we shouldn't, because like I said, the fundamentals are good. It's just a question of, let me update the fibs on this weekly while I've got you here. So that was the last big move on the Dow. So you can see 23,178 is the top of the fib zone, and this is the 50% retracement. So I think if we hit that fib zone again, we could at least come down, we could potentially come and see a 50% retracement. That's 22,100. Could it get that low? Yeah, anything's possible. So the overall trend line we've got now on the weekly is there. So we're above it. Let's come down and test it again, and then maybe we can start to get going. But the bottom line is stocks are very, very expensive, and this is a natural correction in reaction to that, and I just don't think the correction's over. We're hung right between, we've got no contact with the 200 or the 100 above us at the moment, so we're hung. Close above that 100 and we could be in business. So at least the start of the week I think it's going to be bearish, and I would look for at least retracements into that lower level, which will put it down to about 23.5. So good 800 pips lower, and the volatility is incredible, so I think that's easily attainable. Prepared to be wrong. Let's just see what we get on Monday. This is the 60-minute fibs. I've highlighted this zone here, 24,600 and 24,750 as potential short areas. And this white line here, 24,218, is the Friday close, which is not quite accurate, so I'll do that again. Right, appears that we closed, excuse me, we closed at 234. Let's do that properly. 24,234. Right, that's what my 5-minute chart, 5 and 15-minute charts are telling me. Okay, so you can see the resistance area. This was a key level here at Monday evening. It was support, so that was resistance. On Tuesday evening it was support. It was support until Thursday evening, and then we broke down and then we landed back. So that's a key pivotal area. So more updates on Monday. Let's see where we open on Sunday, and I'll update you with the way in which I'm looking to handle the Sunday open on Traders Roundtable. If it gaps up, I would look for a gap fill to the downside and potentially buy it. If it gaps down, I would look for a gap fill on the upside to potentially short it, etc. Okay, a couple other things. Let's look at the DAX. DAX has, with this whole drop range, we've got a buy signal on the lower fib zone. So this is the outer fib zone, and we open and close in it. So can the DAX pop up? Yeah, it's looking as if it's got the potential to do that, certainly. So again, I would look for some. There's the 60-minute chart with the Friday close on it. If this is bullish, I would look for 12,100 to hold, and then we've got to break above this massive trend line that's coming in from 1st of Feb highs. Okay, just one other chart. So data this coming week, we've got Fed budget balance on Monday evening, which is expected to be very good. Then we've got, well, I'm watching the rugby, I just paused it. Then we've got, so the Fed budget is 7 PM UK time. UK inflation expected to dip a little bit on Tuesday morning, and house price inflation looking lower as well. Again, quiet on Tuesday for the US. Then we got inflation in the US on Wednesday, looking for an increase in the inflation and retail sales. So we're looking for some good numbers in Wednesday. So that could be the point in which this, well, even Monday, if the Fed budget balance comes in healthily as it is expected, that could lift the markets. But let's just wait and see. That's late in the day on Monday. Not a lot on Thursday. More inflation for the US. UK retail sales looking to pick up on Friday, and housing data on Friday. So with that in mind, I'm looking at this pound versus the US dollar cable to come back down to 136 area. It's 50% of this last move. So here's the move. In fact, I'm going to take that fib back a bit. No, I will leave it there, sorry. That's the last big move. I think we could come all the way down to 135. It's only 300 odd pips from where we are. We closed lower. The lowest close of the week was Friday. So we've got this 50-day, 2050. Yeah, a 50-day average at 137. So I'm looking to short into 138.75 if I can on the pound US dollar. All right, so bear in mind what I said about the 15-minute chart on the indices to avoid the volatility and to try and limit the amount of time you might be whipped around. And let's just see where we are at Traders Roundtable. And I'm going to talk to you on Traders Roundtable about advanced Fibonacci. Alright, so thanks for listening, and let's look for another decent, exciting week. Alright, thanks very much, and bye for now.